Hello there, this is James and you're watching Tixee Live. In fact, you're watching Tixee Live watch-along of the big event this week, which is the US Non-Farm Payroll Announcement. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. So I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. Okay, so today, of course, is Happy NFP Day. Happy NFP Day. Oh, hi, Eric. Hi, Eric. How are you? I hope you're well, my friend, and you're doing well. So, yes, indeed, it's Happy NFP Day. NFP Day. And, of course, the big question is the NFP going to be a giver of hope or a hope killer? And I'll explain what I mean by that in a moment. Now, of course, this is due in literally 8 minutes' time. And for those who are new to trading, I thought I'd give you a very brief description of what the NFP is and explain why it's so important, why the market is transfixed often by this event. Now, the non-farm payroll, or NFP, measures the number of new jobs created in the previous month, not including farm workers, hence the name non-farm. Very creative. Now, this number, if the number comes in higher than expected, that means more jobs were created than they anticipated, that's considered bullish for the US dollar. If it comes in lower than expected, then it could be considered bearish for the US dollar. Now, this is the crunch amount. We're going to talk a bit more in detail about this. The economists actually estimate this payroll number will be the slowest growth in the payroll number since December 2020. Expectation is for the number to come through at 250,000, and the previous number was 315,000. Obviously, we've got the average earnings coming out as well, both month on month and year on year. And of course, US unemployment coming out at the same time. However, it is all about the NFP. Okay, it's all about the NFP. The reason being is because the market, and this is why I said, is it a giver of hope or a hope killer? Because if we do get a better than expected number, well, that's a good point. That is a good point. That is a good point, Eric. And this is the point I'm about to make. You're absolutely right. Okay, because at the moment, like I said, this is why I've said good question and good point, by the way. The reason why that's the point I was going to make, and it's a very good point, Eric, is that obviously the market at the beginning of the week has got itself into the mindset that if we start seeing bad economic data, then the Fed will do what's known as a pivot, i.e. pause raising interest rates or do less aggressive interest rate hikes. Now, if underline Eric's point, if we do get a worse number, then the market will again get that sense of hope again for the Fed's going to be gentle and it'll be good for the market. If we get a higher number, it'll be bad for the market and good for the dollar, because then the market will say, no, there's no holding back the Fed. The Fed is going to be very, very aggressive. So Eric's point is absolutely right. And here's the thing, though, no matter what the number is, unless it's really low, and I'll go through the scenarios in a minute, my point being is the Fed really wants to see real pain before they slow down. So a slightly lower number won't be enough. They need to see real pain. Plus, don't forget, in many ways, they want unemployment to go up. They're anticipating it to go up by 4.4%. It's currently at 3.7. So they want it to go up because that means less workers, means less money being spent, leading to easing price pressures. So in many ways, they want a slowing down of the job market. But like I say, here's the thing. The market is hoping that we're going to get a worse number, which will then hopefully give the market a boost. And obviously, there is the anticipation we're going to get a good number. Because here's the thing. If we look at what the NFP has been over the previous months, August last month was 315. July was a shocker, 526,000. But it's been pretty steady all year. The NFP number has been pretty steady. And though we are anticipating a low number today of only 250, that's still growth. that is still growth, and that is still, around the COVID levels. So it's still growth. So that's the thing, you see, that we have got, and they keep going on about how strong their labour market is. That they have got a strong labour market, and the labour market can handle these interest rate hikes. The other argument they've got is people have got more spending money because they've saved a lot during COVID as well. That's a good idea. You think 300,000? Do you know what, Eric? Do you know what? I have a feeling it's going to be quite a good number. So I wouldn't be surprised if it is about 300 or 300 plus. What I would be more interested in seeing, though, is what the last month's number is. That's revised, because they usually always revise the number, don't they? So I'll be interested. But that's a very good call. I like that. I think around the 300 mark as well, Eric. I really do. I just got a feeling because the labour market is strong. But then saying that, September was a horrendous a horrendous month for the markets. It was absolutely diabolical. So would that affect the labour market last month as well? So it'll be interesting to see. Anyway, we've got about 2 minutes. 2 minutes to go. As usual, I have my trusty phone ready so we can get the data and share the data together. But let's go through some potential scenarios as we're waiting for the build-up. Scenario number 1, released as expected, shows the labour market is slowing, but still healthy. US dollar could gain strength and stocks could come under pressure. Below expectation. Now, this is what the market is probably praying for. Okay, below expectation. If it comes in 100 to 200,000, worse job creation than during COVID. US dollar could fall and stocks raise on hope. However, this type of scenario, the move higher might only be short-lived. Scenario number 3, really lower than expected. And I'm talking under 100K new jobs created. US dollar could fall and stocks and risk assets could rise considerably. This move could last longer. Okay, so that's scenario number 3. And scenario number 4, above expectation, for 300 to 500,000, like Eric just called. Market could come under real pressure and the US dollar gains more strength. So this is what, scenario 4 is what the market's hoping what will happen. They're hoping for really scenario number 3, real lower than expected. But anyway, let's have a quick look at the market and some of the assets we're going to be looking at. Obviously, I'm going to be probably keeping a real close eye on gold. And obviously, the gold, sterling, British pound, US dollar, that has some real dramatic volatility as well, as we all know. That's going to be the other one I'm going to watch. So at the moment, gold is at 1710. Where's the sterling at the moment? 112 at the moment. 112.08. So these are the pairs, sterling and obviously gold. Of course, I would look at the dollar yen as well as obviously the euro dollar. And we'll have a look at how the S&P handles the announcement as well. And obviously Bitcoin, because it's a risky asset, see how that handles it. But anyway, let's get ready. Let's get gold up, because I want to see how gold reacts. So anyway, we've got 8 seconds. 8 seconds. Let's have a look. 8 seconds. Oh, that's a good number. 210. Good call. Good call. Right. Oh, hello. Gold's on the move straight away down. Oh, it's going to test that psychological level straight away of $1,700. What is it? It's got to be good. It's got to be good. Or it could be just the market feint, because sometimes the market reacts like that as well. Let's have a look. Oh, come on. I've got my fingers are all stuck. Right. Come on. All right. What is it? Oh, okay. Slightly better than expected. NFP comes in at 263, not overly past the number they wanted. Oh, they expected 250, so slightly higher. Unemployment's back down, though. So 3.5%. So that's from 3.7. Average earnings. Let's have a look what the average earnings came in at. Pretty much as month on month, 0.3 as anticipated. So pretty close. It's close, but slightly higher. It's not a dramatic number, is it? It's slightly higher, better than we're well off, Eric. But slightly better. But as you can see, straight away we've had gold is slightly moved straight down. It tested that psychological level. Let's have a look at sterling, because that is volatile as anything at the moment. Again, that also came back down. So 1.16627. Euro dollar. Again, under pressure, 0.96. So 0.9765. Dollar yen, how did that do? Oh, hello. Look at that. It spiked above 145 on this. That's getting to that level where BOJ intervened last time. So there we go. Stronger dollar at the moment. It's because it's a better number, but it's not. It is better than anticipated. But it's not like record breaking. It's record breaking. Let's see what they revised last month's number down. Let's have a look, actually, because that's going to be interesting to see. So look at that. It's going. Dollar yen's moving really well. Let's have a look. See. What if they revised the number at all? 3.5. That's good unemployment, though. That employment is good. Labour force participation rate is pretty good as well. That's higher than anticipated. So again, quite a buoyant labour market on that. What did they revise? Did they revise it? No, they didn't actually revise it last month. They've kept it the same. So okie doke. So yeah. But like I say, there you go. I mean, like I say, again, it's still a healthy labour market. Unemployment is good. 3.7 down to 3.5. 263, again, only higher by 13,000. But again, shows that the labour market is still strong. I mean, it is slowing. It is, slowly coming down. But it's not coming down dramatic enough, is it, to really sort of say, really say that, oh, yeah, the Fed's got to slow down now. This is going to give them a little bit more of a boost. Let's see how Bitcoin did as well. Bitcoin obviously must have come under pressure as well. A risk on. Yeah, well down. Well down. Let's have still in that range anyway. But like I said, let's look at the sterling again. Yeah, so like I said, economy as it stands, we have a lot of dollar strength. Oh, thank you very much. I really appreciate it. Thank you. I hope you find it useful, interesting, and and like I say, it's supposed to be for education and to inform you how things, what things work. So I really appreciate that comment. Thank you very much. I really, really do appreciate it. Thank you. I really do. But yeah, like I say, look, if we look at it again, good late, it's still strong. It's not coming down dramatically enough. The Fed's still, not that I think this would ever change the Fed's opinion anyway. Like I say, the only impression I would ever think is if the number came in shockingly lower, a lot lower, like under 100,000, that might then think. But and again, it hasn't happened that way. It's still coming pretty solid. So yeah, there we go. I mean, what does everybody else think? Eric, what do you think about that number, bud? What do you think about that number? I mean, we all expected it to be a bit higher. Okay, we were going 300,000. I would agree with you. And we were slightly off. I mean, I think always this other gentleman who did 210, he was the closest. Good shout on that. Very good shout. Now, I think this, of course, is going to be the build-up now. Okay, obviously the market's reacted. Let's have a quick look at the S&P, actually. See how the S&P did. Oh, let me show you this. Nasty. Or big spike down. A big spike down. Currently, you managed to recover, a bounce a little bit. 3,726 points. So that's pressured. So pretty much as we anticipated for, say, scenario 1/scenario 2, to be honest, isn't it? Slightly higher than is anticipated, but not quite, So there we go. Well, I mean, what does everybody else think? I mean, I think now this sets up something amazing, which is happening next week. I think it's Thursday, the 13th of October. It's happening. And that's going to be a big one. Any guesses what that is? This leads into US CPI, Consumer Price Index. That's going to be a big one. That will really move the market. And I probably, no doubt, I definitely would do a watch along for that, because that potentially could be huge. Could be absolutely massive. I mean, what was everybody think? Do you think that at some point, we're going to get some shocking data that the Fed will finally slow down? Because at the moment, if you look at it, all the US data, apart from the ISM manufacturing PMI, which we got on Monday, which was reading was a 2-year low, all the other data has been reasonably okay. Yes, initial claims went up slightly yesterday, but again, it's only by about 9,000, so it wasn't that dramatic. I mean, like I say, so the US economy is still, there is signs that it's beginning to slow, but overall, it's still pretty impressive, pretty good. So I think this is just going to spur the Fed on even more. Which I've been saying all the time. I never thought they would change their mind on this. I never thought they would. I didn't think they would. Good job once again. Oh, thank you, buddy. Hey, mate, how are you? Thank you ever so much. What do you think about that about that result, my friend? What do you think about that number? Are you surprised? No? Are you surprised? I mean, like I said, I'm pretty surprised by that. Well, not overly surprised. I tell you what, I was surprised. I was surprised in July when that number came in. That came in at 526, and that I was literally speechless for almost a minute because I couldn't believe that number. I really couldn't believe that number. Yeah, don't forget, I'll be back on again later today, and we'll talk about that in about just over an hour's time. Well, we do basically end of the week wrap up and the US session, and it'd be interesting to see how the US reacts to it as well, because that's opening in just under an hour's time. So it'd be interesting to see how the US reacts to this. But initial reaction is dollar strength, risk appetite off, and the Fed is going to go full steam in raising interest rates. That is the initial impression at the moment, because like end of the day, the NFP did come in higher than anticipated, not by a lot, but still higher, showing that the US has still got a very good labor market. Don't forget, you can jump in and ask me questions anytime at all, or like I always say, share your opinions. I like to hear. I like to have open conversations about what you think, what you reckon, all this, about that. I mean, I'm really excited now. I'm really excited now about the US CPI next week. Really excited about that, because that's going to be a potential real barn burner, as I always say. Like I always say as well, if you think of a question later, if you can't think of a question right now, and you think of a question later, you can put it in the comment section either on YouTube or Facebook. I will see them and I will reply to them next time I'm live on air, which of course again will be at 2 p.m. UTC. So please come and join me for that. If there is no other questions, not a problem. Big shout out to Eric. Thank you ever so much for saying hello, and good call on the number. You weren't actually 263. You're not that far away, were you? Actually, you're quite good. Good call on the number, Eric. And thank you for always a pleasure to see you. Always Flexi, I guess that's your username. Good call with the 210 as well. And thank you for coming along. I hope I pronounced this correctly, Mr. Nita Lemo. Big shout out to you. Thank you ever so much for watching and saying hello, and for the very nice comment. And Johan, as always, my friend, big shout out to you, buddy. Thank you for coming. And again, the real nice comment. And thank you to all of you for obviously coming along to watch this watch along, which, okay, it's been exciting. It's not the most dramatic one we've ever seen, but like I say, I think the CPI one next week is going to be even more dramatic, and that should be fun. But anyway, I really appreciate everybody coming along to watch me. And like I say, if you're watching me on Facebook and you like these little videos, by all means, give us a follow. If you're watching me on YouTube and you like this little video, by all means, subscribe if you like. Hit the notification button so you know next time we're going live. If you've enjoyed this video and the excitement, and you put up with me, my over-the-top enthusiasm for the markets, which I simply cannot help because I love the markets, then give me one of these. It's nice to know that you like what I do. Anyway, till next time, which will be at 2 p.m. UTC. Don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, the risks at hand before entering any trade. Till next time, every single one of you, trade safe.